All right, about let's talk a little bit. Let me complain. Can I complain? All right, because a lot of times, yeah, I have a tendency to do it too, but we make this game sound so easy when even when you have a plan, right? And you hear me talk about that a lot, right? You gotta have a game plan. You gotta have an idea of what you want to do in whatever situation arises, right? You may not need to react. That situation may not, come about, but you have to have some sort of game plan. So, as most of you who are members know, right, the playbook in this environment, because sentiment was getting a little too frothy and we were going into the heart of earnings season, was just to take it nice and easy, remain tactical, right, and see if we can get some selling to get short-term sentiment back on our side and start to play for the squeeze again. Okay. Now, this is before obviously the market sold off, got hit with this virus stuff and all that. But make a long story short, oh, you know what? I'll do it. I got to show you the again. You know exactly what I'm talking about, but just to give you an idea, if you're not, okay. All right. So basically, this is what again we refer to it as a playbook, obviously. Okay. So into these highs here, we wanted to raise some cash, roll position, have to liquidate everything. We just, if you wanted to hold, you have enough time to sustain some consolidation or a pull, right? Raise some cash. So if we do get a dip, we're able to buy it, blah, blah, blah. Okay. And lo and behold, usually the market finds some reason, there's always some catalyst that comes out of nowhere. All right. But you get this coronavirus and you get some legitimate selling. Okay. And now we go from a period of where a lot of sentiment readings out there, right, are at extreme bullish, meaning everybody thinks the market is just going to go up forever. Okay. I use the word tactical. On the tactical end, right? So on the short term end, think of traders, right? You got investors and you got, okay, those who play on a day. On the tactical side of things, we finally had bulls get kicked in the teeth and set up a nice little climate as far as sentiment's concerned. So in other words, everyone's giddy up here, right? Long out the ass. They get caught. They puke it all up. And now the same people who were chasing the highs, more than likely, are looking to short this. Okay? They're looking to short into weakness here because everything looks like crap. And it looks like we're all going to drop dead and turn into zombies from the coronavirus, right? Normal feelings. Okay? So our plan, right, again, the playbook was to wait for that setup and then find something to buy, okay, find something to get long, look for entries. The first sign that we get where bearish sentiments at an extreme on a tactical basis, on a short-term basis, okay? So in other words, in simple English, when the bears and the shorts are leaning too aggressively on the short side, okay, on a short term, we want to start looking for long entries. Okay, great plan, right? But here is a that I face a lot. The longer you play this game, you're going to run into it often. Not I wouldn't say often, but you run into it enough to where it frustrates you. Okay. Here's what it looks like on a sentiment chart. I even dolled up the chart so it looks good for you guys. Okay. So you see the green zone, pretty self-explanatory, right? And what we want to do, we wanted to raise cash and now look for long entries when we get this signal, okay? Fortunately enough, we did get that signal, right? Once here and once here. The problem was this signal came into the close. We got the signal. Then the overnight session into the morning, huge gap up and go right from the opening bell. Okay. So that instantly, whatever swing trades I was looking to ease off these signals went out the window completely. Okay. Because I didn't get long shit. Right. Then next day, I'm looking to come in and I'm looking to get long. The market gap. So what I do, every time I face this problem, the only way I could take advantage of it now is on an intraday basis. Okay, so you get the gap up, right? We see sweeper activity, people getting squeezed all over the yard, right? You see sweeper after sweeper after sweeper. You find something, whether it's ETF, whatever you feel comfortable, a name they're tattooing. That's what I usually like to play because sometimes it may be lagging a bit, whatever the case may be, and make some money intraday. A lot of times maybe you get lucky and it ends up being a nice hit, but more than not, the swing trade is the bread and butter play off that squeeze trade. Because not only are you going to play a swing and catch that if it clicks, but you're likely going to day trade as well around it. So it's like the double whammy. Okay, without the swing, so you're not making as big of a dent. Okay, so once did this happen. Okay, it happened again off this signal. All right, and the point I'm trying to make is, you can get frustrated from this, right? You're being patient, you do all the things right, you follow the playbook to a T, and yet you still get, excuse my language, effed, right? So, but it is what it is. But I just wanted to bring that and start this webinar off with this, because a lot of people out there make this game sound so easy, right? You got players playing both sides of the market. Market's rallying, they're long. Market's selling, they're short. Meanwhile, I'm showing you how difficult, right? I'm being honest with you and telling you how difficult it was with me waiting here for this thing to fall in my lap. This is what I was waiting for the past 2 weeks. And I still couldn't catch it. Okay, I still couldn't catch it. So, and a lot of times, especially from members, I get the question often. Lewis, who's a member, we were talking about this for weeks because it was happening way too often about a year or so ago. But the only thing you can do is front run the signal. Okay, so in other words, if like here's the close the following day, right? And you see some heavy selling the next day, right? And now you're anticipating, especially with our intraday sentiment readings that we look at, you're anticipating this, okay? And you front run and buy before the close. All right, this way, if it gaps up, you catch it, okay? Because here's the problem. Like, not only does it gap up, sometimes it never comes back down for you ever again, right? We've seen it many a time, especially when you get gamma lopsided. You get that one spot of entry, and then you got to chase to make any money, all right? But the only other way, especially those of you who are members, you've been asking me a lot, forever now, is to front run the signal. But the people that I traded around that I know who do, what they do is they buy something early to front run the signal, and then if it falls in their lap the next day, they look to add. Okay, it's almost like a gift. They look to add. Okay, because you could be early, right? The best case scenario would be you get the signal at the close, you come in the next morning, the market, there's a follow through, a weakness, or even a flattish market, and you have some time to think, right? You can see what names may be catching action, what names maybe you want to include some individual names, the whole shebang. All right, that would be ideal, but it doesn't always, it doesn't always line up like that. All right, so as much as, again, everything was lining up to exactly what I was looking for, okay, I still had to scramble and chase and trade intraday just to make a little bit of money off the squeeze, all right, just so it doesn't go to complete waste. And luckily, the rally was strong enough, and not only that, the flow was supportive, right? Like, and that's another thing, those of you who are members, I wanted to touch on today, okay? You see how messy the flow could be when, we're in the heart of earnings season. The market may be choppy, not even weak. There's no momentum out there in the market. You guys got a good example of what the flow could look like. Awful. All right, block trades all over the place, call buyers, put buyers. You can't make any sense of it. All right, so when the flow is confusing, I stress to you guys that's the strongest signal to not do anything. Okay, but when the flow looks like it does today, and you're coming off a squeeze signal, that's telling you got some juice, especially off the opening bell. Right, you got some momentum out there, because what's happening is players are getting squeezed. Players in the same predicament that we're in, didn't get their hands on anything and are missing out on a rally, right? So they're sweeping calls and everything across the yard, okay? And not only that, what we were seeing these last, especially today, okay, especially today, everything that people puked up, okay? So what happened is everybody was buying all these names, right, all the way up. Okay, they didn't care. Oh, I'll hold it through a pullback. I don't care. I'll buy more. Right? Tough guys. But then you get this coronavirus, and now you weren't anticipating that. Anticipating, your run-of-the-mill pullback. You weren't anticipating people dropping dead all over the place from some virus. So now what happens? People start puking their longs into that news, right? Because they're scared shitless. And then you get a day like today where everybody, I won't say everybody, but a lot of those players who were puking the names they wanted to be in, but got scared out of their holdings, scrambling back in because they never wanted to get out in the first place. All right. And we saw that as well off the first sentiment signal, if you guys remember. And that was the difference between today and the first squeeze. The first squeeze was just a handful of those strong names, right? Microsoft, Apple, Tesla, AMD, and they just tattoo those things, okay? Today was more about buying everything, right? The action was broad. You name it, it caught action today, right? There was a lot of names out there catching action. Now, if we were in a flat to sideways or weak market and we see this type of flow come in, we're doing all over the place, right? Because it's not forced buying. It's obviously the professional money feeling quite confident and bullish out there, okay? But this was a little different because you get this runaway rally. People feel like, oh, maybe it's not going to be as bad as it is, as everybody was making it out to be, and they're scrambling back in to get their long positions put back on, okay? But in my opinion, the only thing that changed out of all this was you had China throw in the kitchen sink before the market opened on Monday, right? Every short was waiting for the big kaboom. You had even Tepper scaring the poop out of Jim Cramer at the football thing that went on. I don't even know what the hell it was. Everybody was scared shitless of the Asian markets opening. And then before the markets even opened, right, you had the government and the PBOC say, listen, you can't short stocks, no margin calls. We're going to pump all sorts of liquidity in, right? They pretty much rigged the game to the point where, how could it not end up being a bullish scenario, right? No matter how scary the news may be, if you're going to rig the game, and that's the thing, that if you short this market, okay, and again, I'm not saying you're not going to catch a in there. That's the problem. You're going to have some profitable short trades, but that's the worst thing that can happen to you. The game is effing rigged, okay, to the upside, and you still short and get your ass handed to you. All right. And if this wasn't the best example of how difficult it is to catch a big winner on the short side, I don't know what else you need to see. I don't know what else you need to see. You had everything lined up for you, right? So basically, this is the impression I got from a lot of shorts, okay? They shorted into this, okay? Maybe they even started up here if they were fortunate enough, right? They added into this, and they actually probably were profitable at a point in time. We're in the green, where they could have took some profits off the table on the short side. But they want more. They want the big one. They want the big one. And one thing this market doesn't do is give, and I'm not just calling you riffraff, I'm included in that camp. They don't pay the riffraff on the short side. They don't even pay the smart money on the short side, let alone they're going to pay the riffraff on the short side. All right. So as gloomy as it looked, as you might have felt being short, you got squashed here. And now what do? Right? This is the question now that I ask everybody. What do you do if you're short? Or did you sit through this? Okay. If you say, oh no, I just stopped myself out, this market could come right back down here in a couple of days, if not break new lows. And you'll be even more suicidal. It's the most difficult thing to do. The short side is the most difficult trade you can possibly imagine. And you just got proof of it right here. All right. This could mean nothing in the grand scheme of things. We could end up down here in coming days, weeks, and all it did was screw the shorts. That's all it did. All right. There's my short rant for the day. All right. So what are we looking at going forward? Today, I'm impressed by the flow, obviously. It's hard not to be impressed. Okay. But you know me. Especially with earnings, we're still involved here, right? We're getting through some of the big ones, but with still a good amount of earnings on the table. What I want to see is them do this into off any, further coronavirus, whatever it's called, fears, or any negative news for that matter. Right? So that will tell me that all this buying that did come in, chasing green, okay, is committed. They weren't forced in because of price, right? Because that's emotion. That never works out, right? I want the flow to tell me that the buyers that we've been seeing come in recently are committed even into weakness to support these markets, okay? And that will be the telltale sign that this little correction or breather, whatever label you want to put on it, is over for now anyway. All right. Because here was some of the better looking order flow out there that, you had Tesla catches $25 million in sweeps every day, right? I could put Tesla on this list every day. Sometimes I do, sometimes I don't. All right. Because the order flow has been ridiculous. But this is, some of the orders, some of the names I may have day traded off the order flow, or some of the more aggressive, some of the better looking sweeps out there. All right. So this was to start the day, the TTD. And they came in, named a good 6-7 times, just like this. Here's 4 of them. Okay. But you could see too, right? Alone, just the amount of sweeps was pretty aggressive. Dollar amount behind them too was nothing to sneeze at. Okay. So the problem you run into on a day like today is how much are they up, and how much, is it worth a scalp? Is it worth a day trade? Is it worth, and that's I can't give you a guideline for that. That's a decision you got to make. You know, when you're day trading, those are things you're going to have to answer on the fly, right? Can this action create enough momentum based on how much the stock is up already for me to at least get, a scalp? See 20, 25% on the calls, whatever you're looking for. All right. This happened to be, thanks to the rest of the flow as well, a beast off the action. I don't know where she closed, how much she closed, but this thing just kept going. And another thing for me too is a pricey stock. So I get in the equity. Obviously, I'm not taking as big of a position that I would normally take if the stock was flat. So I'm sizing down. So it allowed me to look for a little more upside because I had a smaller piece of it, and I got a little lucky, and it just kept going even after I got out of it. So you can see the move here, ridiculous. A lot of strength today in TTD. All right, and that was one of the first names they hit. Okay, and here's another thing too. Okay, you have earnings on February 20th. All right, so that was another factor I had to take into account. It's also earnings flow. All right, so if I see this type of action, for example, on a day where we're not coming off squeeze sentiment, right? We're not coming off squeezometers off the 30s and stuff like that, I probably pass. But because I just had to get long something because I didn't end up putting on any swings, I was looking for stuff to get long. This was a nice one. I don't know if anybody caught this for a couple day trade here. Work. Anybody catch that by any chance, option wise? I know a couple of us caught the stock. Oops. Hold on. I just X'd out your questions. Let me put them back on here. Chronological order. TTD earnings the 27th. Oh, the 27th? So this is Ryan? Figures. Oh, a couple of you guys caught the work? Yeah, work was really interesting because we've been talking about this name a lot. Yeah, we spoke about this name often of late, just because of this. You got this thing laying dead on the concrete floor, right? No real squeeze opportunity. Every time it squeezed, you ran into some selling there, and they knocked it back down. So what happened was yesterday was probably the best looking activity we saw in this name since we've been watching. They hit some Aprils pretty hard. It was just quality action compared to what we were seeing. A lot of the other stuff was just cheap junk and not enough of it. All right, so you got a little bit of a squeeze today and then a little gap up, and they came after it again today and didn't stop the morning into the afternoon. All right, so this was a nice day trade, a little quick swing trade or some nice action. So that made the top bet for 2 straight days here. Here are a couple of the orders here. You see the difference in the buying? Remember what we were seeing? They were like 30-cent premium calls they were buying, and you'd see one sweep and you wouldn't see them again. Here they lay wood, right? Some real buying came in. Now again, some of it catches earnings, some of it doesn't. Right? This is all earnings season, and I don't have to go over that stuff again. But that's the difference in the flow. All right, and if you, I'm going to bring it to your attention when the flow looks different. And I don't know if you saw it yesterday, but I mentioned how the action and work was the best we've seen since we've been following the name. This caught another bet, TAL. Both these names caught missiles into the teeth of the selling. China plays, China education stocks. All right, but this had a big move yesterday. The other one was this EDU. Both of them had a couple of nice days here. The TAL sold off a little late. All right, so that's a little extended. This is a name that's been catching some nice flow. HIIQ has been pushing higher a little bit, but they've been committed to this name. Anybody know this name? Is there any sizzle behind this name? HIIQ? Anything exciting to know about? Which one, the HIIQ? I like that type of flow when they keep coming back, regardless, obviously, of the market conditions and all. And as you guys can see on the chart here, this is not, extended by no means, double bottom nonsense, looking different. Yeah, they've been coming it. I don't own it. Ryan, I don't, any of these new names, I don't own any for swings. All of these things I've day traded at most. All my swing positions right now are all names I held when I took risk off the table, into the highs, basically. Names like FCX, Mosaic, that stuff. XOP, which pretty much just ruined my whole trade there. I mean, I got time, but I'll never learn with crude and energy, right? I'll never learn. Never learn. And I had a profit on XOP, if you could believe that. I was actually green, and I didn't take it, thinking maybe crude will finally get out of that menagerie it's been in, but everything else has been okay. Came back nicely. What else? STLD. So you got here a steel name, quite a half decent bet. I've seen bigger, larger orders in this STLD. I've seen more aggressive, but something new to keep an eye on down here. Me personally, it's post earnings, so that's good. I want to see more. These things have been tough. These things have been tough. These things have been real tough. And we'll go into that as far as what names to keep an eye on here for different styles of trading, because it's tough out there for a chunk of the market because of what's going on in China. Doku, I know I've gotten a good amount of questions on this name throughout the months on webinars. Anybody happen to be still in this thing? This thing caught fire. DOCU? I think it's software, right? So the flow here hasn't been, anything exceptional. There's been buying here and there, nothing dramatic. But another one of these tech software names that just got lit up here. Look at this. Another one. You guys are out of the plan completely? Did anybody leave any plan? I know you had profits. You most likely took it, which I can't blame you. But anybody still involved in the plan? That got loose today too. Oh, yeah? Oh, all right. So at least you had a little left, Tree. At least you had a little left over. But look how good this looks. This looks good, look good the whole way, right? Very quietly, not much talk about this name. They've been buying this name for quite a bit, and they've been rolling out positions for more time, right? Keeping exposure on. It's just, right, a drunken Miller play, exactly. A drunken Miller play, you took the words out of my mouth. It always looked good, Tree, right? It was slow. That was the problem with it. It was really slow. But once it gets loose, that's when the excitement happens. 12-9. Yep. Wow. So look at that entry. That was the perfect spot, Tree. Right here, right? Yep. I don't have any. If anybody's wondering, I don't have any into today. But such a good looking name, so my point, not to jump around, these are the names I think we have to eye on pullbacks first and foremost. I don't think in other words, you guys know what I like. Usually I like the bottom scrapers that are starting to make the U-turn and stuff like that. Um, that's going to be a tough trade right now, especially with everything going on in China. Okay. They're going to have their snapbacks when they overdo it, kind of like what Cat, right? Cat even had some put selling and snap back a bit today. But these things are going to be tough. And until we see big changes in flow and just the climate, I think the stuff that we want to look for, not only the big names like a Netflix on dips and AMD, those are, for trades, I think you have to look at these names. But those underbelly tech names that initially they were rotating out of and then rotated back in and they caught fire, you know? But tech, I mean, just look, okay, look at the Qs. Now that's new highs. SPY looks a lot different. IWM looks a lot different. The Dow looks a lot different. Yeah, and that's the thing, John. I'm not a big fan of looking at Microsoft at all after a move like this. But, I don't want to be foolish at the same time. These are the names. Like, for example, we get hit with a coronavirus headline and there's some selling that comes into the market. Rather than looking at a Caterpillar or an industrial name that is trying to bottom out and stuff like that, for trading purposes, these are the names you want to play those snapback trades in. These are there are no signs. The flow, they're tattooing these things, right? One little breather. I mean, this is the breather here, and it got tattooed, right? So, and you bring up a good, like Goog, this the eye if you're interested in the name, right? Here's what we saw today. Basically put selling. There was one sweep. I don't know how clean it was, but definitely keep an eye on for further action. Where is that Google? I'm going to take a look at open interest too, because a lot of puts hit bids in Google today. Right here. All right, so this guy sold to open the February 14th, 1437 puts when the stock was 1438. So right there, right? Not too far out of the money, give him breathing room. He did take in a hefty $18 for a $500,000. All right, so he does have a little room, but that's pretty bullish right there. All right, that's pretty bullish right there. So you got this name off a dip, especially if you see any further weakness. We're looking for Google sweeps anyway, but if you see a sweep in this name, that's something you want to take a peek at, as opposed to some of the others. Let's see what else we got here. LK, you know the story there. This thing, what a maniac stock this is. So LK was the hottest stock on the board, caught enough sweeper activity to kill a small village. I kid you not. That's how much sweeper activity was there. Okay. Then you had some selling because of what's going on in China, right? And who was it? Citron? Who came out? I think it was Citron, right? As a short. Yes. And then, so you had a 9er high here. So an upside exhaustion signal up here. And you have a 9er low down here. And it caught some flow the past 3 days. Oh, Muddy Waters, right? Muddy Waters. That's who it was. All right. So if there is a coronavirus headline, the likelihood is this thing gets hit. All right. But that's where you might want to take a peek, especially if they're buying it for a snapback type play and she can move. Me personally, I like, and I know you guys, a lot of you guys like that. I like the underbelly tech stuff right now, especially if you can avoid earnings. Schwab, somebody's building a position in March calls in Schwab. They hit it pretty nicely. You got a little breather there. Schwab bought Ameritrade, something to that effect happened, right? I don't know what the story is. Wasn't it Schwab who bought? Wait, who bought who? It was, right? All right, so going back to that point, I don't think this is a name you want to trade, though. You know what I mean? I don't think it's a name you want to play that snapback trade, because it's not that type of stock. You know, this is something you want to buy. You want to maybe add to it, build a position into weakness, and you give it some time and some room. You're interested in doing that. Me personally, I'm not interested in that right now. You know, I'm not interested in that until we get season and I feel a little more confident about the flow and stuff like that. I just play for squeezes and snapback type deals. Okay, this was the second. Where's the second page? Did we look at that? We looked at it, right? Doku. Oh, and this name, some of us are still hanging on to it. Some of us have pulled the plug on it. You know, I can't blame you if you pull the plug on it. I got a nice course on this FCX. I got time, so I'm still holding. All right. Obviously, I wish I sold into the highs. I had a really nice profit, pretty big profit. A lot of it, you know, a nice chunk of it evaporated. But, you know, this virus thing threw a monkey wrench into this whole reflation we were kind of shooting for. All right. Yeah, it killed it. And, you know, Tree, honestly, it may be a blessing in disguise in the long run. You know what I mean? But over the short term, it killed it. It killed it. And for good reason. Completely shut down. You know, look at copper. Copper caught a beating, right? Look at this. You know, copper caught a spanking. Oil, you know, you have China, as big as they are, pretty much in lockdown. You can't expect nothing but this to happen. You know, if get a handle on the coronavirus, these things are going to come storming back. They're going to come storming back. And I tell you what, Tree, and we were talking about this a lot. If this coronavirus doesn't show up, and I'm not making any excuses, if you look, I don't know how much of you guys follow the economic numbers and all, that whole reflation theme is playing just like we thought it will, right? The ISM number the other day, you look at all these economic indicators starting to turn, they would have been all over these names, all over them. But that's the market for you. You know? But like we were talking about just the other day, it may have just prolonged it. Okay. In other words, pushed it to later in the year or a couple months or whatever the case. And it ended up maybe a better setup because of where sentiment was, you know, and how bullish everybody was at the time. You know, so it could be a blessing in disguise. Honeywell. Let's look at Honeywell. That still looks good. Still looks good. Are you in it for a trade, or what are you looking to do with it? Swing into the summer. Yeah, looks good. Looks like it's still, you know, this is the type of name, you know, you're not talking about a high growth name, obviously. You know, this is a big blue chipper, but you had a big ramp here. And even though it looked like it was getting out here, the market weighed on it. But, you know, you're still in this here. You know, you're still breathing this ramp. Yeah. Looks good, Trey. You know, bottom of the range here rather than chasing the highs. Oh, so you sold it into the highs. That's good. That's good, you know. And you know, you probably just got to be a little more patient with these type of names. You know what I mean? See, the reason why, and you guys know, Trey, I'm more your style. I like the slower names that I can build positions in and have control over. The reason why I'm more focused now on high growth underbelly tech is because I can get in and out of them quicker, you know? That's, yeah, exactly. I'm day trading a lot, stuff. If I hold, I'm flipping the next day. I'm not really like I was doing late last year. I'm not giving myself time. I'm not going out with time. Yeah, all those names, I'm glad you brought them up. All these names, I think, are must watch off earnings. Uber, especially. They annihilated this thing. They absolutely annihilated this thing. So you got earnings coming up. You get a little profit taking, selling, and they hit it. You got a re-entry there. I traded this thing a couple times. Trust me, I didn't make as big of a dent as I should have off the amount of flow this thing caught. Yeah, me too, John. It caught me staring too many times. It caught me staring way too many times. But yeah, the Pinterest, I know some of you like that name. That hasn't really even gone anywhere yet. Be interesting off earnings, what they do with it. Otherwise, I would like it here. I would like it here. But all these names, little by little, coming to life. Anybody catch Zoom yesterday? Big reversal today. You may see it hang out here. This was, oh, you caught it? Nice. Yeah, this was a real nice trade yesterday. Real nice trade. So you might see this hang out here for a little bit, right? Watch it. Market gets hit. This is what I mean. This name I would definitely keep an eye on if you get some market weakness. As a matter of fact, it wouldn't surprise me if this thing rallies into market weakness because it's a virus play. That was the gas here. That because of the virus, people had to use Zoom video. So when you get some market weakness or a headline, you see futures down, this is definitely one of the names I'll keep an eye on. Even more so if this thing hangs out here, right? So you could have like, when you draw it, it doesn't feel as painful. But what happens is you get these wide ranges, but it stays in this, like, kind of like a flag. And you down there, you got some cushion on the way up as well. Netflix, how great has Netflix been? I know a lot of you guys caught that trade. I mean, that was a nice trade. That's been amazing, that stock. Right? That's an antivirus play too. You know what else? Two names you guys are probably familiar with if this virus stems up again. IQ, so-called Netflix of China, right? Had a big day yesterday. And supposedly, I still don't even know what they do. Billy. Remember Billy? So these are China names that, have been showing strength. Another China name that benefited off this virus, believe it or not, JD. They're going to have earnings coming up soon. All right, so listen, now we know. I mean, a lot of us are frustrated off the squeeze. All right. I don't think, well, I'm not doing it yet anyway, because for me, the playbook doesn't change much, even off a day like today, even though the flow was aggressive. Now, the thing that changed for me is that I got short-term sentiment against me now, right? I had that on my side. It allowed me to get a little sloppy, especially intraday, because I knew the squeeze was in effect. Now, the squeezometer, I think, closed 67, right? Did you guys see the squeezometer? When was it? 2 days ago? 30. When's the last time we got a 30 on the squeezometer? 30 to 67. Can you believe that, John? In 2 days. Unbelievable, Tim. And then 2 days now, 67. So, now we got to be more careful. Even short-term stuff, we got to be a little more careful. We got to be a little more careful. What else did I want to talk to you guys about? Gamma, that's another thing we were waiting for, right? We wanted Gamma to get to that negative 1 billion. I was salivating off of that. Salivating. We did one little down open, we would have had squeezometer 30, short-term trader sentiment light up bullish, and Gamma negative 1 billion. You would have had to tie me down in my chair and put my hands behind my back. Monday, exactly, Tim. Monday morning. Can you imagine we would have had that whole setup, Ryan? Oh, Tim. You know, so that's what I'm not gonna lie to you. I'm more frustrated off this rally than anything else. More frustrated because we were so close to a sweet spot. Ben's got a question. What are you asking, Ben? You've done this. We'll give a brief explanation. Gamma. Yeah, there's a lot of talk, Ben, out there on that topic, Gamma. All right. So when you ask me about it, I'm going to tell you how we use it. Okay. And a simple definition of Gamma is market maker risk. Okay. So when Gamma gets to a negative extreme, all right, what that tells me is that when a squeeze comes, all right, there's going to be that much more steam behind it because the market makers will need to buy that much more calls to hedge their risk. Okay, so it's almost like somebody getting caught short and they gotta hedge their way out of it. All right, so you got it good. So that's the basic premise. Like that's the bread and butter of how we use Gamma. When it lines up with sentiment, the sweeper activity, that's the trigger. Our eyes light up because not only do we have the potential for a squeeze, we have the potential for a big squeeze because of all that market maker hedging that has to come in. So that's the basic premise behind it and how we use it. There's a lot more to it, obviously, but you can get dizzy, without putting in the time behind it. All right, so we'll see. Hopefully, we still got some volatility. All right, we still got some earnings. Post earnings, there's a lot to pay attention to, and we try to be patient. Just don't take the needle, especially if you're not being quick and tactical. Trading intraday with a stop loss. Don't take the needle and chase 3-day extravagant moves. And then wonder why you were up a little rug pull and you never had a shot. That's what a lot of players have a tendency to do. Like even like a Netflix. You see like a Netflix, okay? Like here, at least this is what you want to wait for, okay? At the least, off a move like this, okay? At the least. So now, for example, here, okay? Unless you're trading intraday, okay, or you're going to flip this thing tomorrow morning, no matter what, all right? You don't want to start a position now here, okay? Not that it can't go higher, right? That means nothing. But the problem is the likelihood, okay, more than not, you're going to have at least some sort of breather like this, if not a rug pull, before you take your profits off the table on the swing anyway. So even if it comes at a little higher level, you want to at least see some sort of breather, pullback or consolidation, and then you see the sweepers that we've just been seeing the last couple of days. That's your cue. That's your cue if you were eyeing the name. You don't want to get sloppy. You don't want to chase sweeper activity, 3 days deep off a move, and then you get hit with a coronavirus headline and you're wondering why you're behind the 8 ball. You want to be, you rather be a little earlier than late on these swing positions. I wish I was telling myself that a couple of days ago before this market squeezed, but You know, it's the truth. You'd rather be a little early on swings than late, because I'll tell you, the problem is on swing positions, a lot of times you're up on it. Like, let's say you'll be up on Netflix tomorrow morning, and then the rug pull comes and wipes out all your profits and then some, and then it's got to breathe, right? So you're stuck in that now. It doesn't always happen, but it happens a lot, and that's what you want to try to avoid. All right, anybody else have any questions or anything to add? Any names that look interesting, especially any high growth? I heard Tesla finally a little dumpage into the bell. This is nuts. You see the size of those Tesla sweeps, John? I can't believe it. If we, once upon a time, if we saw a $250,000, $300,000 sweep in Tesla, right? It was like we found God. Like you never would see it. You would see small weekly $40,000 bets on day of expiration, stuff like that. Once in a blue moon, you see a Tesla sweep, and it was worth a swing. Now there's 5, 6 multi-million-dollar sweeps in this name a day. I can't believe my eyes. Granted, you got a huge short position, and it's, a big name, so many eyeballs on it, but the deeper activity, the sub activity has been ginormous. So, and if anybody has any questions, like, oh, what do you think of Tesla? No, I have no idea. I have no idea. Don't even go there. I have no idea. Nobody has any idea. Elon Musk doesn't have an idea. This is in the hands of the parabolic gods. Disney, I tell you, if Disney didn't have earnings, Matt, I would be in those July calls. I would be in those July calls, not a doubt in my mind. Not a doubt. So we'll see if this thing maybe flattish to soft tomorrow and they come back and hit it. Yeah, true. You can't trust the earnings stuff. You can't trust it. Yeah. Remember, we were making the point, like, if Disney caught the type of action that we saw in Disney, that July action and whatever it was, April, if it caught that action and it wasn't earnings related, that stock would have been an unbelievable day trade. The stock would have exploded off that action, the size and how aggressive it was. If you guys remember, if you were watching it, Disney didn't budge off that buying. There was no reaction to it. Like they weren't even going off. I don't know, Tree. There's so many different intangibles involved with earnings that you're guessing. You know what I mean? It's a guessing game. You really don't know what the hell they're doing. Are replacing equity, you know what I mean, with options, with calls. Some people may be hedging shorts. Yeah, maybe it was just a trade, but why did they go out to July, Tree? I guess they got, what was it, up like 50%, those calls, and they just got out of it? Or they got out before the move? The next day. I don't know, Tree. Again, I'd be lying to you if I gave you an answer like I knew, I used to try to make sense out of earnings flow, and I can't. I can't. I've seen names get absolutely tattooed the day of earnings, either puts or calls, and the total opposite reaction in the stock. Like you couldn't believe it. Buying puts all day long, and the stock gapped up off earnings. It's a tricky environment earnings season. The rails, I'm puzzled because they're in a world of their own. You had China slow down and all those economically sensitive names slowing down, and these things, they don't miss a beat, right? They don't miss a beat. I don't understand. How are they doing so? The CP I sold, I thought I was a hero tree, right? I mean, come on. This one I sell with a ton of time, thinking that, if anything, any hiccup, especially economically sensitive industry, and this thing's at new highs. Right. And names like MMM and CAT, all these names, they're not rails, but they got hit hard. Even the airlines, you name it, everything got hit hard. The rails, like a rock. Look at these things. Look at this. Hardly budged. I don't get it either. I don't get it either. So, hey, listen, sometimes, little pockets of this game are clear to you, right? You see the flow lining up, you see the story, there's not a lot of that going on right now for me. I'm not going to lie to you. Yeah, Buffett, it has big positions in the rails, right, John? He loves those things. He loves those things. I mean, just look around you, okay? Tepper, right? Like Tepper is the Mac Daddy of, if you had the choice of his ear to find out what's going on in the market, okay, it would be anybody else, okay? He went from, this is as favorable environment as you're going to find, to now we got a big wild card in this coronavirus. Make sure you're not on margin because things can get crazy, And after those comments, the market squeezes like a banshee. And these are the smartest minds out there. Yeah. And it's got to make you laugh when these guys have trouble figuring things out, and riffraff on Twitter think like they know what they're talking about, right? Tepper can't figure it out, but Twitter, they know, the impact of the coronavirus. They know the death rates, and they throw statistics at you. Yeah, that's why you can't get FOMO, right? You can't let rallies bother you if they get away from you, right? There's frustration involved, like I had, but in reality, when things aren't clear, right? And that's been what I've been pushing to you guys for the past few weeks now, right? It's just, I'm not bullish, bearish. It's not clear to me, right? I don't have a clear read on the flow, right? Sentiment, wasn't where I want. It's not clear to me to be bullish here. So when those things are up in the air for me, that's when I take a step back and chill out a little bit. I wait for certain setups. If they fall in my lap, I hit them. But, just because I didn't participate in the squeeze as much as I would like, now I'm going to go get FOMO and buy the shit out of everything tomorrow morning. Yeah, that's foolish. We call this, I'll leave it on this note, and I'll let you guys go enjoy your night, right? Like I refer to this, me and my buddies, we refer to this, like when all that lines up, that's a sweet spot, right? Because you feel a little confident, you have your signals all lining up, right? When they line up, you have an idea, you have a handle, you have an idea of what's going on, right? Doesn't mean you're going to make money all the time, but at least there's some, you can feel confident, you can feel good about it, right? When they're not there, just because a market is going up, you feel like you have to be involved in chase for that reason. You're not going to last too long in this game. Whether you're doing it on the side or you're trying to do it professionally, whatever you're trying to do, you're not going to last too long. It's about waiting for, you're up, and that's where you try to get most aggressive. Not just at one point, but when you get those squeeze signals line up and then sweepers are confirming it, right? It has you now, instead of confused and trying to figure things out, you're leaning bullish, and you know what you need to do, right? You come in the morning, you know what you got to do. Looking for entries here and here and there. If I get some weakness, you know, I'm going to add to this and this and this. You have a plan. You have, yeah, without a doubt. And that's the thing. Like the big moves, like for me, Tim, like a big move from here is not something I'm ever going to catch, you know, for me. Like any big moves, any, and you guys see it, those of you who are members, any of my swing positions that I have decent hits on, right, that I give a leash to, are always coming out of some sort of drawdown or consolidation where a sweet spot lines up, right? And like Tim is saying, I have confidence at least can be big enough, right? Like a rally out of here, I have no idea. I can't even base it on anything. The market rallies from right here, I have no idea. I can't base it on anything, right? It's not going to be based off sentiment. Gamma is off of, right? Flow, we're in the midst of earnings. Every day we're seeing different flow. So I got nothing to base it off of. If I hit a big winner out of here, I got lucky. Usually my best come from these periods here. You know, you get this, it all lines up, sentiment and everything, and then you give a leash with a couple of months and you catch some of that move. You know, or any pullback for that matter, where things line up. When they don't line up for me, yeah, I'm not catching big moves because I don't have the confidence to. I don't have the clarity to. Yeah, Matt, it's been that short-term trader sentiment's been money. Sometimes it comes early. Like in 2019 and stuff like that. It'll come early. And sometimes you're in corrections. Like here's the key too on that indicator, because if you fall in love with it, that short-term trader sentiment indicator is just for squeezes. That's it. You know, just for squeezes. It doesn't tell you anything about the move beyond the squeeze. Hence the definition short-term sentiment. You know, the larger moves, right? Those intermediate term moves, those are the moves. If you want a signal from sentiment, you want it from those intermediate term sentiment indicators, right? The bull bear indicator that we look at, all the sentiment trader indicators on an intermediate term basis that we look at, they all line up. Yeah, exactly. The squeezometer and the short-term trader sentiment, they work together. That is more for, you know, that intermediate term. You know, like we've been seeing, when you see like the bull bear indicator lining up bullish, right? People are too bearish, and you start to see some of those other indicators, you know, even like a will probably line up with those intermediate term indicators on the bullish side. They all come in bunches. The tweeps, we just like looking at how tweeps are feeling anyway, John. Whether it was good or bad, we like to see how the tweeps are doing. Dan, what are you asking? Which one, Dan? The red, these red zones? They all are tied to Niners for the most part. So the red zones are just to make you aware of a spot where things are extended, where you may want to take profit. But as you can see, things still rally for a bit, and then a breather comes. You know, green zone is where you look for on TradingView. Where are you? Are you in the room, or are you on private Twitter? Where are you? Oh, what's your thingamajig in the room? Blue? Come on, Blue. You never asked me that. I'll send you the thing with it. You never asked me. You're full of shit. I see you 100 times a day and never respond. When? In the heat of the market during the day, you're asking me, you nut job? As I'm pumping out sweeps? I probably don't even see what the hell you're saying. Oh, there you go. Nick posted it in the off-topic section, Dan. See? You're not paying attention. Nick said he posted it in the off-topic. Shows you how much you're paying attention. Yeah, the Carney in the room. The WWF wrestler we have in the room. It is the same. I'll DM you if it doesn't work. I'll send it over to you. All right, guys. Oh, Adobe. Let me see Adobe. They still have to report, no? Let's see. Oh my God. Look at this. Strong to very strong, Tim. Adobe. All these names, man. On any dip, look, CRM, right? Every dip gets bought in these things. Every dip. Every dip. Workday's heating up. Remember this thing had trouble? See how this thing's coming back now? Look, Workday. AYX. I remember when it caught that size. That's another one. All these underbelly plays. Just be careful because some of them report. That's all. MDB. They're all getting ready. Yep. So those are the names, Gordon, that I'm looking for on dips. ILM. That's healthcare, right? Illumina. Oh man, I thought that was at highs. Look at that base. Whatever comes out of. Yeah, that's a nice bounce spot right there. Yeah, but Gordon, Matt, they all look like this plan looked, right? They all look the same. Nice run, breather, and they're all making the U-turn. Most of them broke out. Some of them are playing catch up. You know, like you see, like Workday didn't get there yet. When do they report? This Workday caught some flow. Here's the problem: earnings, February 26th. That's the problem. You know, if you trade them, you don't worry about it because you're looking to be in and out of them. But if you're looking to take a position in it on a dip, you got earnings. You got to avoid, or you want to hold through it. I don't know what you guys want to do. That's the big problem. AYX, you know, and if you get a dip off earnings, you know, that's another thing. What did that Texas interest? What about the semis? Nobody likes the semis anymore? We can't forget about those bad boys. WY, I saw that, right? Keep action there. Weyerhaeuser. What's the story? Cause some March action, maybe. This got hot with the trade deal. Yeah, this had some flow, and I remember as the trade deal was getting signed, this thing was strong, and it got hit with all the other commodities here. Looks like it should bounce by accident, MW. You know, looks like you should get a little bounce by accident. But yeah, so we'll keep our eyes open. Actually, post earnings. Look at this guy. Remember this one trade? LRCX hasn't stopped. Unbelievable. Yeah, this is a while now. This thing hasn't had a real dip. This was the one little dip here. Rare, but when it does catch action, this EW, it's a slam dunk. They're pretty good when they hit this thing. Yeah. Wow. Up and south, right? So we'll see. Once we got this week, you got a big bunch of earnings, and then next week, things then flow-wise. We should have a decent amount of names that, we're done with earnings. So we'll play it day by day. Enjoy the night, guys. Always a pleasure. Yeah, Trey, until you see clarity and you feel, like things are making sense, there's no reason to jump out of your shoes. Nice and easy. Be good, guys. I'll see you tomorrow.